This is Matthew Cratter from Bitcoin University, and today I wanted to talk about why Bitcoin is a better investment than real estate. And here we're talking about investment rather than the debate between whether you should own Bitcoin or have a house over your head that you own. So let's say that a person has an extra $1 million to invest. First question is, why invest it at all? Why not just leave it in a suitcase under your bed to be really, really safe? Well, that's obviously because if you store your savings as cash, it will lose purchasing power over time and you will end up poor. We can see the purchasing power of the US dollar here from 1913 when the Fed was founded. It was equivalent of $26 today. And in 2020, that $26 of purchasing power has been eroded down to a single dollar. So what you're looking for if you're storing any amount of savings, which is really your life energy, your economic energy, what you're looking for is a store of value that will at least preserve your purchasing power over time, if not increase it. So let's assume that you already own a house that you live in. Then you could use that $1 million to buy a second house, either to rent out or to live in part-time. And when we see wealthy people have multiple houses, they're not just consumption items, they're a way of storing value and preserving purchasing power. The problem with this, what happens if you buy a second house? There are ongoing costs associated with holding the second house. Let's just say a 1% property tax in some states in the US, it'll be higher. For example, Texas is much higher. Places like Hawaii and Colorado are much lower, but let's use a 1% property tax, 1% annual maintenance cost. This is a rule of thumb for owning a property that on average you'll have to spend about 1% of the value of the property, especially if it's not just raw land. But if it's a house, maintaining it, let's say a 0.5 percentage point for annual insurance cost. And then we have these other things. If you're not living in this house and it's in a climate that can get very hot or cold, you're probably still going to need to pay for some utilities to heat and cool it. You might need to water the yard and take care of the garden and the exterior. Then some percentage as well on alarm systems, security, etc. And as the other ongoing cost really is just this headache of maintaining the house. You may need to even delegate this to someone and hire someone to help take care of this. So let's be conservative. Let's just add up the first three here. We get 2.5%. Let's be conservative and say that this comes out to $25,000 per year. So that's 2.5% on a house that's worth approximately $1 million. Now you're going to need to have a job or other income to pay this annual $25,000 cost, especially if you're not renting out the house. So let's assume though that this is a pure investment and that you're retired and without income to pay this cost, because people tend to accumulate large amounts of savings like this later in their life rather than early, and they may be retired at that point. If you're retired and you don't have other income to pay these ongoing $25,000 per year annual costs, then you're going to need to have an extra $50,000 available for the first 2 years. If you're enjoying this video so far, I just ask you to hit that subscribe button, hit the like button, and also leave a comment. So if you're going to need to have $50,000 set aside for the first 2 years, and often when you buy a new house, you discover that there are problems and things need to be fixed. So technically, if you don't have that cash flow, and if you're not going to have it over the next 2 years, but you're only going to have $950,000 out of that original $1 million to buy the house with, because you're going to leave a separate little slush fund of $50,000 to pay for things like maintenance and property taxes, etc. Or you're going to need to have $1 million plus some extra cash on the side. So in other words, you're going to have even more than $1 million to buy $1 million house, because you're going to have to hold this money for ongoing expenses. If you do this, though, your investment returns, percentage-wise, are certainly going to be lower because you have money tied up in low-yielding cash. So you have $50,000 either way being saved somewhere, or maybe $25,000 if you're just going to do it for the first year. But to be more realistic, and if you've ever owned a house or a rental, you know that your maintenance costs are really going to come in chunks. 1 year they might be minimal. The next year you might need to cough up $40,000 for a new roof, $20,000 for a flooded bathroom or leaky roof damage. Of course, you could rent out your property for cash flow, but then you're also going to need to pay a property tax out of that cash flow to the property management company. Typically, at least in the US, they take 8 to 10% of the top line of rents. Either that, or you're going to need to spend your own personal time or that of your family helping to unplug toilets, clean up messes, calling plumbers, etc. You'll also likely have higher maintenance and damage costs if you rent out your property rather than living in it yourself. At least that's my experience. One bad renter can burn more than a year's worth of rental income by the damage and destruction that they cause, and the security deposit is never enough to pay for this damage. It's usually relatively small relative to the value of the house itself. So then you'll probably need to waste additional money. If you get a nightmare tenant like this, you'll probably need to waste additional money and time taking them to court. And even if you're renting out this investment property, and even if you can deduct the maintenance costs and property taxes and insurance against your rental income, you're still going to need to have as much of the cash up front to pay those expenses as they occur, which again means that you're holding cash on the side, probably in a savings account or something like this, that's not earning a very good return. So to summarize, as Michael Saylorwood said, your property, your investment property, is quote-unquote leaking economic energy. Now, don't worry, physicists and engineers, just a metaphor, but the leak is real. This is a leak of your savings. That roof will need to be replaced eventually. That bathroom or kitchen will need a major remodel unless your tenants want to live in 1950s conditions or styles. Those carpets are going to need to be replaced every few years. You're going to need to buy a new furnace and a new AC and a new dishwasher. Thanks to the weather and your tenants and the second law of thermodynamics, your property will constantly be leaking economic energy. There was an old movie about having a nightmare tenant and trying to evict him called Pacific Heights. I don't know if this has aged well, but it was definitely an interesting movie when it came out with Michael Keaton in it. So be sure to check that out if you're thinking about becoming a landlord. But wait, there's actually more. When the next pandemic comes, the government might tell you that you can't collect rent for another 24 months. Your government might also just outright seize your property in an effort to redress past wrongs. Similar things have happened, obviously, in South Africa, Zimbabwe, etc. You might even need to leave your country someday, and houses are not exactly portable. Here's an article I'll link to in the description notes below about Ukrainians who left their homes behind. This isn't just the Ukraine, though. This is the oldest tale in history. People being displaced and losing their physical possessions and their savings because they can't take them with them. With real estate also, you need to trust the government, the judicial system, the police, and ultimately the military to protect your property rights, simply because properties tend to be large, you can't fit them in your pocket, and they're not like something like Bitcoin or physical gold. Physical gold is obviously very difficult to transmit across borders or to take through TSA, etc. So it's not the solution that Bitcoin is. With real estate, you ultimately need to trust the government and the military to protect your property rights. And they might just decide not to do that. Even your tools of self-defense can't stop them if they really want to get you. And they might say, we're going to seize your house because you might be a bad person. We're going to seize your house under eminent domain because we need to put power lines or a highway there. And we're going to pay you what we think the property is worth or what we say the property is worth, not what it's really worth. They'll always pay you less than it's actually worth. And then to add injury to insult, they may say, now that we've liquidated your property under eminent domain, you also owe us capital gains taxes on it. How convenient and lucky for the government tax offers. Now, by contrast, Bitcoin does not leak economic energy in the same way. $1 million or $1 million of value stored in Bitcoin does not need a new furnace every 10 years or a new roof every 30 years. Bitcoin doesn't require annual maintenance costs. Bitcoin does not require annual property taxes. And if your country imposes an annual property tax on your Bitcoin, this is probably coming for certain countries, you can just leave the country and take your Bitcoin with you in a brain wallet. You just memorize those 12 or 24 words and you can go anywhere in the world. You can't take your house, you can't take your stocks, you can't take your bars of gold across borders, but you can take your Bitcoin. Also, Bitcoin does not rely on the police or military to enforce property rights. The nice thing about Bitcoin is the Bitcoin network itself and the consensus and the various equilibria themselves enforce your Bitcoin property rights. And no one can seize your Bitcoin unless you share your private key with them. In this way, owning Bitcoin is like having a bank account in cyberspace that no one can censor, confiscate, or devalue. Now, obviously, the government could come, or some bad people could come and put a gun to your head, and you might be tempted to spill your private keys, but this is not something that can be done en masse with the whole population. It'd be very difficult in a 300 million person country and if 50 million, for example, own Bitcoin, you cannot go door to door and put a gun to everyone's heads. That would not be practical. So this is the real difference, that Bitcoin, especially when there are a lot of Bitcoiners, Bitcoin helps to protect your private property rights. Lastly, Bitcoin is scarce. The Bitcoin maximum supply, as you all know, is 21 million coins, and probably a lot less than that due to lost coins. People estimate that about 4 million coins have been lost. So that means Bitcoin maximum supply is somewhere closer to 17 million. By contrast, US dollar maximum supply and other fiat currencies is effectively infinite. We heard from Stanley Druckenmiller a couple weeks ago saying that not only does the U.S. have $31 trillion in public debt, but it also has all these future entitlement payments to make, Social Security, Medicare, etc. And when you take these into account and you present value them, the debt load is something more like 200 trillion. What's going to happen? There are not enough dollars in existence to service this amount of debt. The Fed is going to have to print more money, and the Fed is ultimately going to have to buy these government bonds and put it on its balance sheet. Fed balance sheet currently at about 8.3, 8.4 trillion, but it's going to have to expand massively, and this will all be driven by money printing. You'll often hear real estate people say, they'll quote Mark Twain, I believe this was Mark Twain, buy land, they're not making any more of it. Of course, this actually isn't true when you're thinking of scarcity, Bitcoin scarcity. Truly, we know the maximum supply, but they are making more land. In Hawaii, they're making very nice beachfront, future beachfront land. From 1983 to 2013, the Big Island in Hawaii added another 500 acres of prime real estate that will be ready in probably a few hundred years. In 2020, I sold all my rental properties and put the money into Bitcoin, and I've never looked back. I can't tell you how good it feels to get out of real estate investments and to put the money in Bitcoin. I still own my own home, the roof over my head, but I do not have any more rental properties, and I'm very glad. No more property management calls, no more calls from the city, no more flooded bathrooms and roof leaks, just pure digital money in the form of Bitcoin that cannot be censored and that I can move anywhere in the world on a moment's notice. If you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video, and let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.